I guess the nice thing about temporary differences, if you can get down that first entry and you know whether we have a deferred tax liability or deferred tax asset, and you understand how the deferred tax asset or liability reverses over time, the rest of the problem, if you're tracking that reversal through uh, until it's gone, it is very similar to what you did when you recorded the reversal or the temporary difference. So here's what we're going to do for the next year. For one more year goes by, it's 12/31 of 2017, and you can see that we've still got a temporary difference. The difference actually increased this year because of the maker's depreciation rule, and we're told, I don't have it in front of me, but it's in the problem that the pre-tax accounting income now is 200 million. And let me just get rid of these so we're not confused here. So we have 200 million in pre-tax accounting income, and I'll just get rid of these two because we can use the one above. So the income tax expense is 200 million times the 40% tax rate. So $80 million is what we would record on our income statement in 2017 for income tax expense. But what we would pay the IRS isn't the same because they allowed us to deduct an additional $114 million in depreciation because of their maker's rules. So what happens is that $200 million we have here is not the taxable income. It's actually going to be smaller by that difference, by the 114. So I could just add this number here. And so we have $86,000 as the taxable income, and you calculate your tax based off of that figure, which is 40%, oops, which is 40%. 34.4 million in income taxes payable, and so what you'll notice is that the deferred tax liability rose now by an additional $45.60 million. So this is the entry you would have at the end of 2017, not 16. And we repeat that process over and over again as the years go by. So let's do that here while we have this video going for the next year, which is 12/31 of 2018. We've got to delete these numbers, and you'll notice that it's starting to reverse. And the book income, but the book depreciation is larger than the tax depreciation. And we're told that in 2018 in the problem, they tell us that the pre-tax accounting income is 100 million. So my income tax expense recorded on the income statement is this pre-tax accounting income times the 40%, $40 million, but that's not what I'm going to pay the IRS. Now watch what happens. The IRS says, oh, you can't deduct the 150 you deducted for depreciation. You can only deduct 90. That means I have to take the $60 million difference, and I have to actually increase this amount. So my taxable income is going to be $60 million higher than my pre-tax accounting income, and I calculate my taxes payable to the IRS off of that figure, which is still 40%, $64 million, and now the 24 million. It starts to reverse itself. This 24 million goes on the left side of the deferred tax liability, and so at the end of 2018, you have a balance in your deferred tax liability that shows up on your balance sheet in the asset section of 40.8 million. And then lastly, in the last year, 2019, we have pre-tax accounting income that's given to us in the problem of 77 million. And so remember, that number has $150 million of book depreciation, straight line depreciation calculated into it, but the IRS says, nope, can't take that much because you took some of it up here already. So we will allow you to only take $48 million of depreciation, which means you have to add back the $102 million to the 77 million. So you'd have 102 plus 77. You have taxable income of 179 million. So you actually have to pay the IRS 40% of that figure. And on your income statement, you only show income tax expense of 40% of the pre-tax accounting income figure, which means we have a difference now of 40. You don't want a negative number there, of 40.8 million. And we could plug that into our T account, and what you'll notice happens is that the right side is going to equal 64.8, The left side equals 64.8, which is logical. This thing is now gone. It would not show up on a balance sheet anywhere because it has fully reversed itself.